Hi traders, and welcome back to IFX, and today we're going to talk about the ADR, which is going to be another extreme. So today we're going to talk about how we enter on the reversal block on ADR, which is the average daily range. And this is very important. We're going to talk about a few points on that, and then also if you're a scalper, this is great to enter on M5 or M15. So let's get over to the charts and see what it's all about. So the ADR, or the average daily range, is actually very simple. There's an indicator that pretty much gives you all the information already, and I'm using an ADR that gives me we're doing it, I'm calculating it by 10 days. So right over here I'm going to go to my indicators list, and then I have my ADR, and pretty much, like I said, it's very simple. So the ATR period is going to be 10 days, and that's about it. So we can change it to 14 days. So what is the average daily range? Well, very basic. It's just averaging the last 10 days, how much the market has moved up and down for that specific pair. So right over here is going to give you already the information, ADR 70. So the average for today, give or take, this pair should move 70 pips. And then right here just gives you 50% target, which is half of that, of course. Like if you enter, maybe you should be looking 50% of that, which would be around 35 pips. And it tells you that today has moved already 62 pips. So how do we measure that? How do we know? So right over here, this is the ADR, the top, the bottom, and the top. And if I just go pretty much from the top, and I measure from the top of today, the highest of today, to the bottom of today, it has moved around 62 pips. And then if I move all the way down here to the low ADR, will be around 70 pips, give or take, right? And the same goes from the lowest for today to the high, to this high ADR, will be around 70 pips, okay? So the market likes to come back and touch to this low or high ADR. So it is also going to give us, it's also going to get up, higher than this. This is pretty much what we call it 100% right here, 100% top ADR and 100% bottom ADR. So sometimes it extends over to, 100%, and it goes down up to 125%, and then we can calculate here like maybe 150%. So keeps going higher and higher. Once the market hits it, then those levels are gonna stay put, okay? And then we just gotta measure after this how much higher and higher is it going after the first time it hit the 100% ADR. So the same thing goes for the bottom. So on the EA, pretty much what we can do is we can select how far can it go, right? So on the EA, pretty much if the candle hits the top ADR and we get a bearish block, then it's gonna trigger an entry, right? This is 100 ADR. But then if you tell the EA, you know what, when you reach 100 or above, I want it to go higher and then or above 100 to enter a trade. So if you tell it to reach 125% of ADR, so once it reaches here a little bit higher, then we get a bearish block on 5 minutes or 15 minutes, then we're going to get an entry, right? Does it happen all the time? Yes, they're really good. This is pretty much more or less scalping entries. So the higher that you get in, the better it is, or the lower that you get in. Like right now, let's just say it's really close to ADR, it will be best that it hits it, or it just comes out a little bit to be able to bounce and then go higher, right? Like maybe to the mid-level or a prior day mid-level. That would be like some targets. And so that is very simple. So on the EA, you're gonna have levels. You can choose 100. So when it hits 100 or above or below, then and if you get a breaker block, then you're gonna enter. Or if it hits 125 or above, then if you get a block, then you're going to enter, and so on and so forth. So the higher the number, well, the more extended, but sometimes it cannot reach there, right? More or less it will reach between 150, because if it's gonna keep higher and higher, more or less you're not gonna get that entry. Now, is there a way we can filter this out even more, right? So we can use another extreme indicator, which we already talked about, which is pretty much the RSI. So we could just say that when it hits ADR, but more or less more often, when it does hit the ADR, RSI is also below, overbought or oversold. So you can use it as a confirmation, or you can use this at a higher time frame. So pretty much what we're saying is that not on the same time frame, because they do happen to be, when they're overbought and oversold, they do happen to work together very much. So instead of saying RSI on the same time frame of entry, then we can use a higher time frame entry, RSI. So let's say, for example, we're using 15-minute entry. We're using the ADR, which ADR is going to be pretty much the same on every single time frame. This is daily, and this is an average of 10 days. So it doesn't matter what time frame you're looking at it. It's always going to be the same, whether I go to 5-minute or I go to 1 hour. It's going to be the same calculation, okay? So don't think that you have to use a different time frame for that. So the only one that we will be changing could be possibly be a higher time frame of RSI, so that we can filter out that entry much better. So that's one of the conditions that we could have. So this is awesome, again, if you look to scalp the market. So if it's overextended the current ADR, so 70 is the average for this pair, then if it overextends to 100 pips or 120 something pips, then that's definitely overextended. It should give us a nice pullback entry. All right, so we have here some calculations that I did. I did some back testing, pretty much just on 5 minutes. So this is 5-minute. And we did the reversal block, we did the block settings on 80, and we chose the ADR starting of 100. So 100, pretty much whenever it hits it or it goes above it, it's gonna give us an entry, right? And then what I did is the RSI, like I was telling you before, we're not gonna be using the same time frame entry as an RSI. We're gonna use a higher time frame RSI. So in here, as an example, we're gonna be using the 1 hour 21 a calculation for the average RSI is 70-30 at medium, and then the space between trades is going to be 35%. Take profit will be 20%, and if any, we have any averaging will be around 50%. So in here, we did it from January to today. Pretty much we got a drawdown of 11%. We got number of trades for 65, and profit factor was 0 because we didn't get any losing trade, so it cannot be calculated. So in here the profit was $1,000. Again, I'm being a little bit, getting in with 0.10 with only 3,000. That is a lot of money, big lots, but just for the sake of this example. So now I jumped to 15 minutes, pretty much the same thing. The only thing that I changed was, of course, the 15-minute block, and then I also, just for the sake, I tried it with the ADR starting only at 125 or above or below 125, right? So if it reaches to 100 only, it's not going to trigger an entry. So everything else is stayed the same. And then in here, of course, 15-minute blocks, work less than here, and then I was giving it an extra filter, which is 125. So I got way less entries. The drawdown was way less, but of course the profit was way less as well. So it's one of those things that you're willing to risk, having more drawdown, have more trades, and then be able to kind of be on top of it and see what's going on, and then eventually maybe get a more profit into that, right? I will have to really see in here, but like I said, the profit was really little. So then in here, on another example right here, I went back to 5-minute. I used the reversal block, but then instead I used a trend indicator, right? So in here, on the first two examples, we're using two extremes, looking for reversal entries only based on two extremes filters. And then here in this third example, what we were looking for is that we're looking for pullbacks going based on a trend, right? So I use the 4-hour MACD with default settings of the MACD, and then I went back to the 100 ADR, and then pretty much, you know, everything else stayed the same. Of course, I didn't use the filter RSI, so I just let it be with two filters, which be the ADR and the MACD, a trend indicator. So what this means is that if we are in a trend and it goes way below or above ADR, then pretty much what we're doing is looking for pullback entries, trend pullback entries. And in here, our drawdown was 7%, and we got 50 entries, just 15 entries less than the first example, and we got $700 in that, and the profit factor was 0 again because it didn't have any losing trade. Okay, so this is not bad. This is something that you can take a look at. So now what you need to think about is what type of entry time frame would you like to get into. Of course, if you use 5 minutes, you're gonna get way more entries. And what you have to think about is, are you looking only for reversals entries, which pretty much is going to be using ADR and the RSI filter, or you're gonna be using pretty much going with a trend pullbacks. And that is more or less, if you're more of a trend trader, you will go with the MACD, or maybe use another pretty much another trend filter, which I have spoken about on the previous videos. So that's something that you have to really think about and get creative when it comes to numbers and stuff like that, with the entry block settings and just changing up things here and there, right? Maybe you can choose, instead of 100, maybe change it to 125%, and then that will be maybe less entries on that, right? So that's, again, it's really up to you. Oops. Let me just see what happened here. So that's pretty much up to you. So they both work. It's just a matter of how much attention are you willing to give it, right? Because we're not just, we're testing only one pair in here. If you're gonna be looking at 10 or 20 pairs when you set up the EA, that is more work, more work for you when it comes down that when the EA gives you those entries, you have to supervise them and make sure that those were good entries, and where would you like to get out, and where would be your stop loss in terms of, risk management, right? So I'll leave you with this. This is a very short video because ADR is very simple. This is mainly only for scalping. It's not really gonna work much for entering on 1 hour or above. It's really only 5 minutes or 15 minutes, and this is very simple. Just we're looking for overextended, that the market has overextended. We're looking for that reversal, looking for a few pips here and there. And if would like to go with the trend, then you can